Hi everybody, we are on the floor of the New York Stock Exchange with Jim Cramer to break down today's market action. Jim, welcome back, good to see you.
Thank you, good to be back.
We have a nice rally here. What's your take?
Look, I don't trust it because the financials are just not part of it. It looks more like a FANG rally again, which is not what you really want. You want a rally that's broad-based, and we can't seem to get broad-based because the yield curve and because of trade worries about autos, and those are enough to derail anything.
You were in Italy over the past couple of weeks. Jim, did you see an American car in Italy?
Yeah, a lot of Fords. Ford's very, very popular. A lot of Fiats too. But I was in northern Italy, boy, the roads are great there. I would point out that everything's involving Germany. It's about Germany and export, and Germany has a hideously large trade imbalance, and the country's built on sending their cars everywhere else, which they send a lot to Italy. And as long as they do that, I think that Trump is not going to relent. I think Trump doesn't like their trade surplus, and I think that the trade people in the White House are all about the trade surplus. And that's what they talk about, that's what they think about, and autos are incredibly important.
When we talk about the broader markets in Real Money this morning, you talk about how negative the analyst community is.
Yeah, I mean, it's crushing, because what happens is that the analysts really create a narrative with their Q&A. And the Q&A is relentlessly negative on almost all the calls I'm on, particularly the companies that are doing well. Why? Because the analysts seem heavily influenced by trade, heavily influenced by international, and also heavily influenced by interest rates. And all those are not going the way that they want. And because they aren't, that's all the analysts know to look at. So they've got a playbook. The playbook says that you should sell stocks in finance or anything to do with interest rates when you have an inverted yield curve. So if the Fed keeps raising, you're going to get one. And they say that when there's tariffs, you got to sell international. And they don't really want to change their view, because if they do, they will be directly criticized for not listening to what everybody knows is supposed to happen. Now they don't take into account the tax cuts. They don't take into account the fact that we're 155th in terms of the amount of export to GDP. They don't take into account our employment. All they take into account is the inverted yield curve and trade and tariffs. And because of that, they cannot ask anything that would lead to a positive. Instead, they're argumentative, they're short-sighted, and they don't believe anything good can last. And that's how we're set up. And it's very important for people to realize that the analysts are more powerful than they've ever been, because if an analyst is really negative on a stock, that stock's ETF then goes down and pulls down every single stock in the sector.
All right, so if that continues, it's going to be a long summer.
Yes. Or autos, if we get a resolution, like the reason why the market was up at the beginning of the day and it is rallying still is because of belief that maybe Trump's zero tariff will work. Now, having come from Italy, where the tariffs are obscene, I mean, you simply can't afford to buy anything American of any capital equipment because they don't want you to be able to buy it. I can tell you that it's not going to be an easy fight, and I was surprised that everyone's so excited about the idea that Germany somehow is going to relent. It's really Germany that's calling the shots because they're the ones that are the big manufacturing power. So I can't be as bullish as everybody else is until I see the whites of their eyes that there's a deal.
All right, Jim, we talked about analysts earlier. How about Rich Greenfield's note on Facebook? Shares could be headed to 275.
Well, I mean, overly promotional. Charitable Trust owns it. It's been a big win for us. We're up huge. We met this morning, decided not to sell any. We could have, no restrictions today. I find that kind of price target calling to be, hi, I'm here, look at me. And I would have preferred a more muted notion. There was nothing in the report other than Instagram is a monster, and I think that that's well known. I joke that they should rename it Instagram because everyone knows Facebook is fake.
Yes. Well, if you look at Instagram, you see messages all over about Instagram TV. They're really trying to get people to watch.
I think Instagram's doing a lot. They're monetizing a lot of different things. I know that some of the people have left who were creative because they're afraid that Facebook is going to start junking everything up. That's not been Zuckerberg's way. The stories, the negative stories about privacy, are losing their, let's say, their ability to motivate selling. But the press is relentless. Why is the press relentless? It's a good story. I mean, when I was an ink stain reporter, I would certainly do exactly what the Times is doing. Those are important stories, but they're not having any impact on stocks anymore.
Jim, Mad Money's back tonight. Who do you have coming up?
I've got Marty Musi. Now, why is Marty important? First of all, I've been recommending a stock for about 30 points. The analysts all dislike the stock. They like automatic data. I think two can tango here. Automatic data is really an amazing company, so I no slight to them. They've done much better than Paychex. But I'm going to be interested in small business. A lot of times, Marty's more muted than you would expect, given the fact that small business has been really the home run in this period because of taxes. And I want to see what he says, because I think that there's been a pickup in domestic, even as international may be dropping.
All right, catch Jim tonight, 6 p.m. Eastern on CNBC. Jim, we've been talking about your trip to Italy. Give us a few more takeaways.
Okay, so here's some things. We went to Leaning Tower of Pisa. I was surprised how close you can get. It's really amazing. We went to Cinque Terre, and we did all 5 towns. I really suggest anyone who's thinking about Italy, think about Cinque Terre, because it's just, if you like to hike, you can stay at a Spartan room at one of these places and hit all of the towns. We went by tram to Florence repeatedly. You can grab a tram to go for dinner. That's the greatness about it. And my garden is late there, like my garden in the Hamptons. But it is quite simply an amazing country with amazing people. I'm in the north this time. We did not go south. But look, if you want a vacation and you want fun, it is still Italy.
Good weather, it was warm.
Every day was beautiful. We were by the pool. We have these lemon trees. Grab a drink. Obviously, we have a vineyard at the end of our driveway where you can pick up a €9 bottle. That's not bad. I like the Ruffino, by the way, which is not far from us. That's owned by Constellation Brands, which had a disappointing quarter. We own it for Action Alerts. I really think that if you're going to go to Florence, you must go to the Apothecary. It's the oldest apothecary in the world that's working, and it's fantastic. Obviously, you go to the Duomo. We did not go to Siena this time. We missed the Palio. Our bad. That's the horse race. But this was really a hiking and relaxation vacation. I needed one. I'd taken about 12 days off this year. So thank you for your forbearance, but it was great to be away.
Jim, we are glad you are back.
Thank you.
Thank you so much.